Your next question comes from Sheila Griffiths. Please ask your question.
Oh, hello. Yes, my question is about combining a contribution towards the cost of the ARP and the compensation fund. If the money is likely to come in as a joint source of income, is the money going to be ring-fenced within the fund so that the compensation fund is protected from the contribution to the ARP fund, or is the intention to somehow subsidise the cost of the ARP from the compensation fund?
I think in terms of how that might work, we need to do a lot more analysis on it. So my answer to your question at this moment is I don't know. And that's one of the reasons why that we haven't made any proposals regarding the compensation fund for October 2011. And what we're going to have to do is quite a lot more work on the back of this round of consultation responses to think about, would it make sense to combine the two into a single fund? If so, should we put barriers within it? Should we protect the money in some way? And all those are major issues, and it's going to take us quite a lot of analysis and work.
Mm-hmm. How much is actually sitting in the compensation fund now?
Personally, I don't know the immediate answer. It will be tens of millions at the moment, and obviously I understand that that's been built up over a number of years.
Yeah.
Recall the last request for money from the compensation fund was relatively low because the compensation fund was quite well funded at that time.
Mm-hmm.
So we will need to consider these issues very carefully before even thinking about should we make specific proposals for 2012 or some future point.
Mm-hmm. Yeah, okay.
Thank you very much.
Thank you.
And your next question comes from Sarah Mumford. Please ask your question.
Hello, I'm going to change my question actually on the basis of what you've just said, because what happens if a firm decides makes a deliberate decision to misrepresent the situation, that they don't do conveyancing when in fact they do? In those circumstances, their clients are going to have a claim against the compensation fund. So surely the claims will just rocket against the compensation fund. If it's a joint venture and they're all in it together.
Yes, I think partially it will come down to firstly there would have to be a judgment made about whether or not fraud was involved. Is this a claim that properly would go against the ARP in its role of being sort of motor insurance bureau, the coverage for firms who do work without insurance, or is it a compensation fund issue? And so one of the things that we need to make a judgment on in deciding this is what's the trade-off between what seems to be a sort of more flexible and more responsive insurance market where you don't have the minimum terms covering every potential client. How do you trade that off against the benefits of the current system, which is simplicity, and that if you've got PI insurance, all clients are covered. And playing into that is a judgment about will some firms respond to this by not taking out cover for financial institutions, but taking a risk and carrying on doing that work. And so I agree that is one of the issues that we're going to have to look at when we make these final decisions.
Because isn't really the issue here that too much shoddy conveyancing is going on and it's not being addressed by the SRA? It seems to me that we're looking at this from the wrong end of the telescope. 40-something million is the most appalling figure, and my real concern is that we're not really addressing that issue.
I think I would agree to some extent. When I spoke at an ABI conference last week, one of the questions asked me at the end was, if you could do one thing, what would it be? And actually, I think there needs to be a real focus, not necessarily on financial protection, how do you pay for when things go wrong, but what steps can be taken to make sure things don't go wrong in the first place. One of the things that Charles River Associates said in their report was that they believed that some of the issues that they were identifying weren't about insurance. They were about a lack of effective regulation of conveyancing in some respects. And the SRA has accepted that it needs to look at that. And so during the course of 2011, as well as taking forward the work on financial protection, we will be undertaking quite a thoroughgoing review the way in which we regulate conveyancing, because I agree. If our aim should be anything, it should be to reduce the circumstances, the number of cases in which claims have to be paid out either by insurance or by the compensation fund, and that's certainly a priority for us in this coming year. Thank you for the question.
Thank you.
There are no further questions from the audio. Please continue.
Okay, thank you. We'll move back to the questions now.
Okay, thanks very much. If firms do, we've got a question here which is that if firms do conveyancing without appropriate cover, that's a problem for the lender. However, what would the SRA's position be from a regulatory angle? I think one thing I need to make clear is that what we're proposing is not to allow an exclusion for conveyancing work. We're proposing to allow an exclusion for cover for financial institutions. So without, even if a firm takes insurance with the exclusion in place, so they're not insured to do work for financial institutions, in theory they can still undertake conveyancing, but obviously only for the private purchasers and lenders, although whether or not that will be a commercial proposition for many firms, I don't know. So if a firm chooses not to take out insurance, but still undertakes work for financial institutions, I think to some extent it will depend on the circumstances. Clearly, if a firm misrepresents to a financial institution that it has cover in place but does not have cover in place, that will be a significant issue for the SRA, and there will be consequences for the firm. However, if a firm does not have cover, if it's taken the exclusion, and the financial institution, who we would regard as being a sophisticated purchaser of services, chooses still to instruct that firm in that knowledge, then I don't believe that would be an issue. So if we permit this exclusion, it will be for the financial institutions to decide and check whether or not they will only work for firms who have the cover. But if firms misrepresent to financial institutions that they have the cover in place, then, as I say, that will be a very, very significant issue for us in regulatory terms. The next question is that small, efficient and competent firms are being penalised for the inefficiencies of other firms. How does the SRA propose to deal with this? I think this really is a question about how we regulate. And one of the other things that is happening this year is that in 2011 we won't just see changes to the approach for financial protection for clients, but in October we would expect to be implementing our new system of outcomes-focused regulation, and accompanied by that is a move to risk-based regulation. So much more what we will be trying to identify is what are the particular risks to the regulatory objectives presented by different firms. And I believe that will enable us to, rather than oversee a system where we're checking compliance with rules and we're taking the same approach to all firms, what we will see is a much greater proportion of our resources focused on those firms who we believe are presenting us and the public with the highest degree of risk. So in my view, with this move to this new approach to regulation, we will see a much more effective focus on not so much inefficient firms, but it's an issue of competence and it's an issue of complying with the regulatory requirements. And I believe that will be a significant help in doing what's been a theme with some of the last few questions, which is our need is not only to focus on financial protection, but also to focus on the prevention of the causes of claims in the first place. Final question, because we're now running up against the deadline, and that is that if a solicitor provides advice to 3 or 4 companies only, is it confirmed that they do not need PI cover at all? What we are proposing, of course, at the moment is the permission of exclusion for financial institutions. So we haven't gone with Charles River's wider proposition, which was that we permit the exclusion of all corporate clients. If we did implement the permitted exclusion of all corporate clients, then it would really be an issue for the solicitor to discuss with the individual insurance company or broker that it was going to take cover out about, within that band of permitted exclusions, what kind of work did they undertake and what kind of cover did they need for that work. So, for example, one of the issues that Charles River identified was that at the moment we require cover up to a certain minimum level, several millions of pounds. If the work done for these small number of companies fell within the exclusion, so it could be excluded from the minimum terms, it would, for example, be open for the solicitor and the insurer to say, I do work for these only 3 or 4 companies, they're very low value transactions, so within this additional cover I'm going to take out to enable me to work for these companies, I actually don't need cover for any claim up to 2 million or 3 million. And so it would inject that degree of flexibility which we believe would enable, in a much more normal commercial relationship, a solicitor and insurer to agree the insurance cover appropriate to their particular business. Thank you.
Okay, thank you very much. Okay, your views are very important to us, and thank you to all those that have posed questions to us today and for your initial thoughts and feedback. This is just a reminder that the consultation is still live and it's open, and the deadline for responses is 28th of February. The consultation paper can be found via our website, www.sra.org.uk, consultations, and you can also follow through with the inquiries box. What I would say is you can actually follow the progress of the financial protection review via our website and via the SRA updates that we also send out on a regular basis. Thank you very much for joining us this afternoon, and I hope that you've actually found this very useful.
Thank you, and thanks for joining us.
Thank you.